Okay, so you've probably been looking at the news and then looking at your 401k and thinking, wait a minute, these two things do not match up at all, right? It's a serious case of whiplash. On one hand, you're seeing headlines about global turmoil, economic chaos. But on the other, the stock market seems to be hitting one record high after another. It's a puzzle that has a lot of people, and I mean a lot of people, scratching their heads. So let's figure out what is really going on here.
I mean, just look at this disconnect. You've got a war in Iran, a blockade on a full 20% of the world's oil supply, the largest disruption in history. By every textbook rule, that should be setting off alarm bells about inflation and sending the market into a tailspin. But what's actually happening? The S&P 500 is soaring. After a tiny little dip, it just roared back and erased all of its losses. It's like the market is living on a completely different planet. So what gives? Why is the market just shrugging its shoulders at news that would have caused a complete meltdown just a few years ago? Well, it turns out the pros on Wall Street are all operating on a specific theory. It's kind of like a secret handshake, and it explains this whole situation perfectly. To crack this code, you have to get your head around the number one most important rule of the stock market. See, the market isn't a report card on what's happening today. It's more like a crystal ball for what's going to happen tomorrow. In this quote from Joe Seidel over at JP Morgan, it just nails it. The market is constantly playing fortune teller. It's trying to guess, what will the economy, what will the world look like half a year from now? So every single stock price is really just a collective bet on the future. And right now, that bet is surprisingly optimistic. And that's exactly what this big rally is telling us. It's sending a really loud, really clear message. Thousands upon thousands of investors are placing their bets that these scary headlines we're seeing about the Middle East, they're just a temporary storm. The overwhelming belief is that this whole thing is going to blow over, and probably pretty soon. But where are they getting that confidence, right? It's not just a gut feeling. This massive bet is based on a very specific idea, a little piece of Wall Street shorthand that has it has a pretty memorable name, the taco trade. Yeah, taco. It's actually an acronym, and it stands for Trump Always Chickens Out. Now, I know it's a provocative name, but the theory itself is pretty straightforward. It's the belief that if any kind of geopolitical dust-up starts to cause real economic pain, like a diving stock market or soaring gas prices, the president will eventually back down to protect the economy. And Mark Zandi from Moody's points out a really crucial word here. Investors have been conditioned. This isn't just a wild guess, it's a learned behavior. They feel like they've seen this movie before, and they're all expecting the exact same ending. A quick pivot, a speech declaring victory, and then it's back to business as usual. So where did this conditioning even come from? Well, to get why investors feel so confident, we just need to rewind the tape to a very recent and very powerful example that is literally burned into the market's collective memory. Let's go back to April 2025. The administration rolls out some really aggressive new tariffs, and the market's reaction? It was fast and it was brutal, a nosedive of more than 12%. The economic pain was immediate. But then, just as quickly, the president hits the pause button. And the result? One of the biggest one-day rallies in history. For investors, the lesson was crystal clear. If the market screams loud enough, the policy gets reversed. This event basically created a playbook for them. As Joe Seidel says, the markets have memory. That whole tariff situation in 2025 wasn't just a news story. It was a training exercise. It taught investors a script, and right now they are betting millions and millions of dollars that this crisis in Iran is going to follow that exact same script, line for line. Okay, but as any good financial advisor will tell you, understanding a strategy is only half the job. The other, and maybe more important half, is understanding the risk. What happens if this incredibly popular bet turns out to be wrong? The entire market's confidence is basically hanging on this one single assumption. So what if this time is different? What happens when the actors decide to go off script? Well, if investors have this wrong, analysts are warning we could see what's called a full-blown correction. Now, a correction, just by definition, is a drop of at least 10% from the recent highs. And here's the thing. When a market is priced for a perfect outcome, any little deviation from that script can cause a very, very sharp and very painful drop. Mark Zandi's quote here just perfectly captures the danger. It's a classic case of groupthink in the market. When everybody thinks they know the ending, the market gets incredibly fragile,
And like he says, if that script changes, we're looking at some real problems.
Now, to be fair, the TA trade isn't the only thing going on. The market bulls do have a point when they say there are other powerful forces at play. You've got this huge wave of enthusiasm for AI and tech, corporate profits have been really solid, and people are still out there spending money. So that stuff provides a pretty solid foundation that you really can't ignore.
So we've walked through the theory, the history, and the big risks. But what does all of this Wall Street insider talk actually mean for you and for your money? Look, the expert advice on this is pretty much unanimous. Trying to outsmart politicians or trying to time the market based on a theory like the taco trade, well, for the average person, it's a recipe for disaster. It's really fascinating to understand why the market is moving, for sure, but that absolutely does not mean you should try to trade based on it.
So here's the bottom line. The most important thing to take away from all this: you've got to ignore the daily noise. It doesn't matter if today's hot theory is the taco trade or something else tomorrow. The basic principles of smart investing, they never change. You have to focus on your own long-term plan, not the market's short-term drama.
So I'll just leave you with this final thought. In a world that is just screaming at you with constant headlines and market craziness, how do you make sure your own financial strategy is protected from all that short-term thinking and stays focused on what really, truly matters, reaching your long-term goals?